So let's do this F6 technical article. The article is based on motor cars, but in this part of the article, we're going to be looking at leasing a motor car for your sole tradership or a sole trader using a motor car for business and private purposes. For leasing a motor car, if you are for the business, of course, if you're leasing it and the car has more than 130 grams emission, then 15% of the leasing costs are not allowable. They've showed you with this example over here. The car is 150 grams. This is the leasing cost, and 105 grams. This is the leasing cost. 15% of this cost is not going to be allowable, but this 100% is allowable. So this 15% is disallowable. So how will it appear? The disallowance is 492, the cost of leasing multiplied by 15%, and there's no disallowance here because it's fine. Now, coming further, if you are leasing a motor car that is more than 130 grams, then the input VAT that you are recovering is 50%. You cannot recover 100% of the input VAT. They've shown you that with an example here. During this quarter, sole trader 960 is the cost, the VAT cost of, 960 is the cost inclusive of VAT. Motor car is used by Jimmy and 70% is for private journeys. How much of the input VAT can you actually get back? Well, what is the VAT cost? It's 960 multiplied by 20 over 120 because it was VAT inclusive, and we can only claim 50% of that, which means that we can only claim £80 of the input VAT. So leasing a motor car for your business that you're using for business and private purposes, if it's above 130 grams, in any situation, 15% of the expense is disallowable. And if you are using it privately also, then 50% of the input VAT is also disallowable. Now, motor expenses, if you're not leasing a car, if you actually have your own car that you're using in your sole tradership, but you're using it for business and private purposes, what is the situation there? You need to adjust for the private proportion of motor expenses that relate to the sole trader or partners. No adjustment for directors or employees. So similar in capital allowances, you adjust for private use by an owner, but not for a director or an employee. They've shown you an example with that here. There was motor expenses deducted of 4,100. 2,600 is in respect of the partner's motor cars, with 30% for private journeys. So how are we adjusting? We are not allowing 30% of this motor cost. We're not allowing this because this was for private purposes. Now, coming to the VAT that can be the input VAT that we've paid that can be claimed. If it is for repairs of the car, even if you're using it for private purposes, you can claim 100%. But if it is for private fuel, there's a different rule here. You can claim 100% input VAT, but there is a scale charge that you will be given, and you have to put the output VAT for that. So you'll be charged output VAT for that. Showed an example here. Vanessa, self-employed, car 70% for business, 30% for private, 1128 for repairs, fully allowable, and 984 on fuel for both business and private. This is the scale charge. What's going to happen? We can claim this in full, but for this we can also claim in full, but we have to calculate the output VAT here and add it. So let's see what they've shown us. Motor repairs, the VAT we claimed for full, yes? This was a VAT inclusive price, so we took the VAT and we got it for full. Fuel, same thing, we're claiming it in full, but this is our output VAT. We took the scale charge, calculated the VAT on it, and this is our output VAT. However, if an employee or director is charged the full cost for private fuel provided, then output VAT will instead be calculated on this charge to the employee or director. So different for employees or directors. Coming further to example 8, Ivy provides one of its directors with a company motor car, business and private. For the quarterly ended 31st March 18, total cost of petrol was this. Director being charged $216 for the private use element. Both figures are inclusive of VAT. Now, so the director is reimbursing you in full. Yes, they have reimbursed you in full for the private fuel. So instead of my scale charge, my output VAT will be what they paid me, and we put the output VAT there. Then of course I'm claiming the input VAT in full. So I've given this private fuel to the director. I have paid for it, but they have paid me back for it entirely. Then I take the full input VAT of the entire fuel cost, but my scale charge is replaced by what the director has actually paid me. Let's come to the test your understanding part of this article that relates to this. 5 that we want to do. Bernard, self-employed, motor car, 60% business, 720 spent on fuel, business and private. This is a quarterly scale charge. What are you going to do? Your input VAT is 720 multiplied by 20 over 120, and your output VAT will be your scale charge multiplied by 20 over 120. Both figures are VAT inclusive. So how much input VAT can be claimed in respect of the quarter? Let's see. I had my 720 multiplied by 20 divided by 120, giving me 120. There we go. Input VAT is claimed like this, but remember, output VAT also increases because we have claimed for private fuel.